Thanks for your company. Well, the Australian share market hit a fresh all-time high, a level that we last touched on Friday after we pushed 0.3% higher, and now we're trading at about 6,868 points. That's for the ASX 200. Utilities are charging up the most today, recovering from Friday's sell down. APA shares up 2.3%. AGL is following in early trade. Last week, we saw the ASX 200 and the All Ords, which is broader, including the top 500. They closed both at fresh all-time highs on Thursday, and last week was also our best week since February, and we gained over 2%. It was also our best month of November, our best month since July, after we put on 2.74%. And today we're seeing Nut Grower Select Harvest continue its rally from Friday. It's up over 2%. It's charged up about 16 cents rather, continuing its rally after it gained about 7% on Friday, hitting $7.74 after announcing that $53 million full-year profit and a bolstered dividend following a bumper almond crop. Woolies shares are trading 0.3% higher, or 10 cents higher, despite announcing that they've been hit by that class action for allegedly underpaying salaried employees, and one-off remediation costs are expected to be between $200 and $3 million, and that's before tax. We also learnt that house prices in Sydney and Melbourne are up 2.7% and 2.2% respectively in November from October, and that's helping the bank's shares rise today. CBA trades about 0.4% higher. Westpac is up the most, 0.3%. It's now at $24.59, and ANZ is following, with NAB down the most. On Friday, we saw Wall Street retreat, with the S&P 500 down 0.4%, and the tech-heavy Nasdaq was down the most, 0.5%, as traders' patience begins to be tested as they've been waiting for that phase one trade deal since October. However, for the month of November, the Dow and the Nasdaq composite put on 3.7% and 4.5% respectively, seeing their best months since June. Black Friday also kicked off the US holiday trading season, and already $7 billion has been spent on online shopping. So retail stocks and the US retail ETFs are ones to watch. On Friday, Best Buy shares dipped 0.1% and Macy's shares fell 1%. So what to watch this week? Well, on Monday, we are learning later today manufacturing and building permits for November. On Tuesday, the RBA is expected to hold their interest rate, or the headline interest rate, at 0.75%. Of course, we're expecting rates to be cut to 0.5% in February, and later on to 0.25% later next year. In Feb, US manufacturing levels are expected to have improved in November, and the prior reading was in contractionary phase. On Wednesday, we of course can learn about the Australian GDP, and that's expected to grow less than expected following last week's news that household borrowing only grew 0.1% in October. So GDP is now only expected to grow from 1.4% to 1.7%. And later on in the week, we'll get our and the US balance of trade figures, so they'll be closely watched. Over to commodities, gold is 0.3% or $4.30 lower after closing off its best month since 2016. The oil price has risen by about 56 cents, or by 1%, after posting a 4% loss for the week, and the iron ore price has dipped 0.7%. It's now $87.46 a tonne, while the Aussie dollar trades at the lower end of its weekly average, 67.65 US cents. And finally, for those taking part in the $1,000 global share portfolio Christmas Bell Direct Competition Challenge, the All Ordinaries is currently trading at 6,968, up about 0.3%.